Do interest rates actually have to come down? I mean, that's the question. If you're watching the news, it's all about the debate on whether or not we're going to enter into a recession and how much does this political environment affect the economy. I mean, remember at the end of 2023, we were so ready to be done and to enter into 2024. Everybody was giving their predictions, talking about interest rates heading as low as the high fours. We saw mortgage purchase applications jump 24% month over month, and new listings jump 90% from December. That's massive. And it talks to the exuberance and the desire for both sellers and buyers to get into the real estate market. Before I jump in to if interest rates actually even need to come down, I want you to do me a favor. Would you please subscribe to our channel and hit that like button on this video if you find this content helpful? I got to admit, I love sharing all of the data around the economy and housing and mortgage lending to help you make the best decision on whether now is the right time to buy or invest. So make sure to spread the love. All right, so let's get back to the fact of whether or not do rates actually have to come down. I mean, our economy is incredibly strong right now. In fact, we've been talking about the SOM rule, which will tell you whether or not we're heading into a recession. And right now, Claudia Sahm and the SOM rules say we're nowhere near a recession. It's like, forget about that right now. So if the economy's not willing to slow down, we continue to see that strength. That strength is showing itself in the fact that the stock market continues to break record highs. I mean, the amount of money that we have in money markets right now has also hit an all-time high. We have over $6 trillion in liquid money market accounts. So the stockholders aren't really hating life. Those people who have liquidity certainly aren't hating things. And honestly, if you're holding bonds right now at today's higher interest rates and you're retired, you're like, please don't let the interest rates come down. Well, with all of the market exuberance, Fed Chair Powell continues to come out stating the fact that we never said 6. We never said 6. The Fed rate was never going to go down 6 times in 2024. He's had to pull the reins on this exuberance several times. He did it at the Fed meeting that we just had that finished on January 30th, where they said, we do not expect any rate drops. We're certainly not doing it in January, and it's unlikely in March. We're really only expecting 3. And then, of course, he came out to the population on his 60 Minutes interview, where he adamantly said, we have 2 goals. That's it. The Federal Reserve Board has 2 mandates, and their 2 mandates is to control the prices Americans pay for everything, i.e. inflation, and to make sure that everyone who wants a job has one. And honestly, right now, both are doing really well. And do you make too swift of a move too soon? Do you reverse course on an economy that continues to be strong, despite the high yield on the 10-year Treasury and ergo the high 30-year fixed mortgage rates? Now, those of us who are looking to purchase a home want it, but those of us who actually own a home are doing really well. We're doing just as good as the stockholders and the bondholders and those who have part of that $6 trillion in liquidity. And I know that we're worried about the real estate market and whether or not it'll go into delinquency or we'll see this massive uptick in foreclosures. And Yellen comes out and she even proclaims the fact that we're not worried about the banks, we're worried about commercial real estate. Whereas other people say, we're not worried about commercial real estate, we're really worried about the banks. And then, of course, we don't know what's going to happen with the political environment, and we're just worried. We just want to find something to worry about. I want to slow the train down, and I want to talk about what's really happening with the strength of not only the economy, but our real estate market, because it's super important right now, mid-February, that we keep ourselves and those things that are about to happen in check, because the political environment will get louder. And whether or not we're heading into a recession and the debate by which did one political candidate do better than another, and did one drive the economy into the ground or raise it up, all of that will come into question, and all of it will make you question whether now is a right time to even consider real estate. So with that in mind, I want to just kind of dive into a little bit of the strength that homeowners are feeling right now, because really it's the home buyers, but home owners are locked in at sub 5% interest rates, a lot of them at 2.5%, 3.5%, 4%. They're locked in at incredibly low interest rates with incredibly feasible and budgeted monthly payments. They have the ability to continue to spend. We saw that. We saw that the core retail sales hit a record high in 2023. So by no means did everyone have a hard 2023. Consumer spending was still strong, and we continue to see real personal income continue to grow. That says that consumers aren't done spending. They've got the liquidity, they've got a really low monthly payment in their house, and they have more income. In fact, income continues to go up. We saw that with the most recent inflation report and the most recent jobs report. We saw an income raise as high as 4.5%. And as inflation goes down, that real income continues to remain strong. Although I could say over the long term, it is softening. Our labor market isn't as tight as it once was. It's still positive. So who's the one that's questioning the most? It's the one who's trying to get in. Is now the right time to buy? Now, Powell, on his 60 Minutes interview, pretty much said that not only do I have these two mandates, but everything else is really outside my scope. Like, I get the fact that interest rates are high because the economy is doing well, and I get the fact that that makes it expensive for home buyers, to get in. But honestly, that's not my concern. It's not my focus. I've driven a strong economy, and if I turn this too quickly, the economy might actually turn, and inflation could go back up again. So I have to make sure that we see a consistent 2% inflation. In fact, if you look at the 6-month run, we're already there. But he's like, we're not there yet. I want to see 12 months of consistent 2% inflation. So what does that mean to somebody who's looking to come in and buy? So you're probably thinking, okay, with these high interest rates, eventually home prices will come down. They have to. At some point, this bubble has to burst. Yes, delinquencies on mortgages is starting to tick up. So is it with credit card debt. But honestly, the delinquency numbers is coming off of the very lowest it's been. So to say it's coming up slightly is saying it's coming up from the very bottom. To say that it's actually still extremely low. We have an incredible amount of equity in our homes. And I would actually say that the same is true for the commercial market. A lot of people are talking about, is the commercial market going to go under, and is it going to pull our residential market with it? Now, there's a lot of data that has yet to be unfolded and unpacked, but honestly, I don't quite see it happening. I see the mid-tier banks who are overexposed in commercial financing starting to struggle, and where they were saying we're going to extend your loans, they're no longer able to say that. Those midterm banks are seeing that they're butting up against the end of that flexibility. So who will come in? The larger banks will come in and buy some of those loans and opportunities, and they'll recapture some of that debt. And so will investors. Remember, we have $6 trillion right now in liquidity. We have a ton of investor money just chomping at the bit, ready to get any of that commercial market at any of a discount, to rehab it, to increase cap rates. We are seeing just as many, if not more, buyers for any commercial properties that might be at risk. So the larger banks are going to support the medium-sized banks, and so will the Federal Reserve. Powell came out directly saying that we will protect the banking system. We recognize that the mid-level bank is overexposed in the commercial market, and we're going to be watching this. We were surprised in March of 2023 when we saw several banks fail. We're not surprised anymore. So he's watching the banks, and the investors are watching the assets. The investors are watching the assets. There's a lot of money right now that's going to come in and buy up those debts. So if that's the case, and the commercial market ultimately won't really go disrupted, then ultimately it won't disrupt the residential market. So ultimately the residential market might have a few more foreclosures, but ultimately the equity will continue to remain protected. And so those home buyers who want to get in against sellers who don't really need to or want to sell because they're locked in at low interest rates are looking to figure out, how do I get in? What am I willing to pay for it? Which will continue to push up home prices. New home builders, meanwhile, are loving this market. I mean, honestly, there's nothing else to buy. Historically, they'd been about 10% of the total sales volume. Right now, they're 32%. 32% of all homes sold are sold by a new home builder. They're new home sales. They're taking advantage of either being able to buy down the rate with forward commitments or simply seller concessions, or they're taking advantage of the fact that there's simply no other inventory to purchase. So they're building smaller square foot homes. They're building homes with fewer amenities to make sure that they can capture that first-time home buyer market. The folks that Powell said are not his concern. So while Powell might not consider you a top priority, I do. I do, because I know the access that real estate gives you. All of those investors who are sitting on the sidelines waiting for those commercial or multi-units or apartment buildings to get pinched by mid-level banks saying, I can no longer extend your loan, those investors know what you need to know, what you need to hold on to, that real estate continues to go up. This idea that trees don't grow to the sky does not apply to real estate. So right now, we continue to see that over time, they're not building land anymore. It doesn't happen that way. So over time, those residences are going to continue to expand into any vacant land. Those new home builders are going to take advantage of growth and opportunity in land development as well as infill. They're going to see opportunity where existing home sellers don't really need to or want to get rid of those low interest rates. So while that's an opportunity for you as a first-time home buyer, I actually want to talk about a few other opportunities as well. Because as much as the investors know that real estate is ultimately a major opportunity to building real wealth, so do you, whether it's one roof over your head or multiple homes that become an investment cash flow. So individual sellers who are looking to sell, who maybe aren't selling right away or backed up right against those new build communities, have an opportunity now to be able to offer those forward commitments, those lower interest rates and seller concessions to your first-time home buyers. But you buyers, be looking for those sellers who are willing to negotiate, who are willing to buy down the interest rate. Some homes are going fast. Like, we're seeing multiple bids because we will continue to see limited inventory. We continue to see mortgage purchase applications spike up the moment we get any relief in our mortgage interest rates. So just know that if you're coming in for the bid on a brand new listing, you might not get that one. So where's your opportunity? It's in the renovation loans. It's in the opportunities for sellers who are willing to negotiate. It's in looking at multi-units that you can put as little as 5% down or 3.5% down with an FHA. It's about getting creative and rebudgeting. It's looking maybe outside your desired metro to those homes that are less expensive, that maybe have not risen up as high, so that you can start building up your equity. Now, I'm not a massive fan of properties with HOAs, especially right now in this market, but is it an opportunity to get in a condo or a townhome that's going to continue to build equity to be able to leapfrog into something else? Is it about the conversation about buying something that's a perfect first investment instead of maybe a perfect first home? It's about getting creative. Because here's the bottom line. If I were to sum up this whole experience right now, is that we still have uncertainty in 2024. We still have ongoing debates and headlines about whether or not we're going to go into a recession. We see corporations are laying off, yet they still feel good about the economy. We have all of the conversations around the political election and what's going to turn. And that uncertainty opens up doors of opportunity. Because as much as as we see $6 trillion in liquid assets and we see investors who are waiting and chomping at the bit to bite in, I want to tell you as a first-time homebuyer, don't sit on the sidelines and wait for home prices to go down. And don't sit on the sidelines waiting for interest rates to drop. And do I think that they will drop? I started this conversation with, do they need to? I mean, they don't need to. The economy is doing great. Do I think they will? I think they will. I think they will. I think the second half of this year, we'll see the Fed rate drop. We'll see mortgage rates start to drop. I don't think that it'll be as extreme as some people chose to predict at the beginning of this year, but I think it will continue to add opportunity. And I think 2025 is an increased opportunity to refinance whatever it is you purchase today. I think ultimately strategy is your number one competitive edge in an economy that continues to remain strong while prices continue to go up. And your advantage as a first-time homebuyer in this market is your ability to commit, to make a decision while others are operating out of fear and uncertainty, allowing headlines to sway what they know their best course of action is. You are not. And if you're looking for a partner to come alongside you, to support you with the competitive edge of strategy, our team would love to be able to do that. And not only as a strong lender who understands the real estate market, if you are not currently working with a strong real estate partner, we have incredible partnerships as well. This is your time. We know that real estate will continue to go up. We also know it does not go up in a straight line. Don't get discouraged. Instead, be ready to take action.